about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss.
What's up, everybody? We are currently live.
We'll take away the weekly.
Trace back down to orthodox. That price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone.
What the kangaroo tell?
Always recommend trading on the 5 minute.
Some of these exotic pairs and pretty steady uptrend, making these higher highs and higher.
Mostly trend following.
The stimulus in a certain way.
All right. Hello, everybody. Welcome back to another free webinar hosted by A1 Trading. So let me see who is joining today's webinar, which is again about trading psychology. Anyone here? Hello, Murad. Hello, happy Friday. All right, so let me share today's program with you. Share screen. Thailand. Wait a moment. Can you see my screen now? Here. Yeah. All right. Hello, everybody. So hello, welcome to another free webinar hosted by A1 Trading. I am Amy, and I'm going to talk about trading psychology once again. I actually do want to focus on trading psychology a bit because I think it's a very important topic. And the great thing is I had a mentor who is a medical doctor, who is a psychiatrist and a trader. So he showed me a lot of useful techniques, and he also explained to me how your brain really works and how you can actually change certain habits to reach a particular goal. All right. So as you all know, the interesting aspect of psychology is it takes reality as it is, right? It doesn't judge. It doesn't tell you what to do, or it doesn't tell you you should, right? Those types of sentences, but it basically takes reality as it is. That's one component of psychology. And the second component is if you don't apply what you have learned in our last webinar, you won't, get anywhere. If you don't apply what you learn, you won't basically see a result. This is how psychology works. The techniques I am teaching, they are not going to be useful for you if you don't apply them. That's the reason I actually want you to tell me, first of all, what have you learned from our past webinar? What have you learned? Yes. What have you learned? Hello, can you hear me? Murad, what have you learned? Or Atwood? Or VP Fellow? What have you learned? Guys, come on. Give me an answer. What have you learned from our past webinar? Did you learn anything? Did you apply anything? Well, I can't see the comments here. Nobody is writing anything. But what I told you last time were these types of things. We talked about the subconscious mind. Your subconscious mind is responsible, accounts for 95% of all the processes running through your mind. That means your thoughts, your feelings, your hidden memories, your habits, your reactions. These are all part of your subconscious mind. And then we have clarified the word habits. What are habits? Habits are repeated actions. Repeated actions lead to a certain result. If you end up not being a consistently profitable day trader, don't blame the broker, the market, gurus or programs that you have bought, but blame it to yourself actually, because repeated actions lead to a certain result, right? They lead to a certain outcome. If you want to change the result, you have to first of all change your actions. All right, this is something that we have talked about last time. And then we talked about the topic of, well, everyone says avoid feelings on the market. Well, did you know that theoretically spoken, or scientifically spoken, all the signals entering your mind, they first of all enter this stage right here, the limbic system. The limbic system is the first stage for any signal entering your mind. The limbic system is the area where feelings and emotions are produced, isn't it? So you can't necessarily avoid it. But we then said one solution, or there are actually two solutions for traders. One solution is, before you open the chart, already know what the higher time frame looks like. I always before I open the chart, I go through my mind what the monthly level and the weekly level looks like. I don't open the chart to check it, but I just go back to my memories, and then I say, oh, all right, this is the monthly situation, this is the weekly situation, these are now the scenarios that are likely to happen. That means always have them already in your mind before you open the chart. That's going to be very helpful for you. Right? And another thing is, see the market as a mathematical equation. That means don't tell yourself, I missed out on a good opportunity. There is no such thing. There are tons and millions and billions and trillions of opportunities for you to trade, isn't it? So that means if you miss out on an opportunity, that's not missing out, right? That's nothing. Then just wait for the next opportunity and see it as a mathematical equation. That means what? That means when you have a certain scenario, think of possible, what is likely to happen. If this and this happens, what is now likely to happen? And in which case, would it be wrong to stay in the market? When do I have to close a trade, right? Stop loss doesn't mean I don't want to lose more money than that. Stop loss means if this and this happens, my idea why I entered the market would be wrong. This is the very definition of stop loss, or this is what I would say. This is something that we have discussed. Then something else that we discussed is create something like a persona. Ask yourself, what does a consistently successful trader need? Write everything down and then create a grid. Right? Write down all the actions you actually want to take for the next 66 or 33 or 21 days. And then this is going to be very useful for you to understand where actually the mistake usually happens in your case, right? Write everything down. For example, I am keeping a trading journal, day 1, day 2, day 3, etc. And this is something very useful because you keep a track of your actions. If you don't do that, you would never understand why you basically, can't reach your goals. And then another thing that I have explained, this is also something very interesting, is for every single chart pattern, candlestick pattern, for every single Fibonacci retracement, for every single whatever, you will always find buyers and sellers. And this is not only me saying it and my mentor saying it, but also the guy who wrote the book Trading as a Living by Dr. Alexander Elder, another doctor who's a trader, who also says, you find always on any time frame, you always have buyers and sellers for every pattern. So your job as a trader is not spotting patterns. Everyone can do it. That's not what you're waiting for. You are actually letting the market come to you for you to check whether you can trade with the trading plan you have, with all the rules you have. The question is always, can I apply all the rules I have to the current market situation? Yes or no, right? And the overall question is, what is the noise and what is the direction? And these patterns, they create a lot of noise usually, don't they? So spotting a lovely pattern and then saying, oh, look at here, there is a head and shoulders pattern, great for you that you can read a chart, but that's not going to lead anywhere, you understand? This is also something that we have discussed, and something that's my mentor, who is, as I said, who's a medical doctor, he said to me, you usually look out for something that you already have in the back of your mind. That means you start looking for, you know, price patterns or for candlestick patterns that you have in the back of your mind. If you are, you know, if you tend to buy, you're looking for patterns that basically support that idea. And this is a very difficult topic, right? This is a difficult topic in the sense of nobody can ever guarantee if a pattern is, you know, really reliable or not. The crux of the matter is always ask yourself, what is more likely to happen? And as I said, ask yourself, if this and this happens, would I need to quit the market? Yeah, this is something that we discussed in our in last week's webinar. And in today's program, we're going to focus on triggers, right? Because triggers make you do something automatically, even though they may not lead to a good result, right? And the second question I'd like to focus on today is gambling versus trading, you know, in the sense of or a gambler's mind versus a trader's mind. And the point is that, you know, you sometimes keep repeating certain actions even though they are completely and utterly silly, right? You must have had these types of experiences. You keep doing something even though you know that this is absolutely rubbish, but you keep repeating those actions. Why? Yeah, we're going to clarify this question. We're also going to clarify how you can actually break that cycle. Now, let me see if there are any comments or reactions or questions so far. Oh my gosh. The new trading for a living. Yeah, exactly. Yeah, that's a title. I think I said something else versus emotions. Yeah, I said it's emotions, but that's something normal, guys. Stop saying the problem is emotions. There is no problem. You are a human being. Even though you are a man, you are a human being and you've got emotions. As I told you, this is a biological thing. This is a biological fact. This is the very first stage of your brain. You will produce some sort of emotions. You can't, you know, this is an automatic reaction. So let's start with this scenario. Guys, I want to show you a couple of screenshots I took. This is the first one, right? This is GBP USD. That's this one here, Euro USD, and that's this one, CHF. Now, the common denominator, and another thing is, let me show you this one here. Wait a moment. Exactly. Now, this is GBP USD. This happened on, that was on Wednesday, right? This happened on Wednesday. As you can see, or what I want to, now, first of all, what I want to clarify is, on the Forex market, in 70 to 80%, or let me begin with this. The Forex market is a market that ends up, you know, ranging in 70 to 80% of the time, isn't it? Right? It happens quite often. Range-bound markets, they tend to, you know, have these rapid movements, right? Rapid price movements. That means on the Forex market, very often you will have the scenario of a rapid movement. Now, the common denominator of all these screenshots is a rapid movement. And the problem with rapid movements is you open up the chart, right? You open up the chart and you see, for example, here, that was on Wednesday. I didn't trade on Wednesday. So some people may be thinking, oh my gosh, I missed out on such a great opportunity, because here we've got an engulfing pattern, right? And maybe you didn't trade it, and then you may start thinking, or you may start regretting that you didn't take a particular trade. And this is where the mistake begins. This is the first step that you can actually change. Whenever you start regretting, stop that and start thinking in a mathematical equation. That means ask yourself, all right, we are here on the monthly level, GBP USD. We have a well-respected support zone, right? A well-respected support zone. And now on the hourly level on Wednesday, as I told you, right, we have here a very stark reaction. We have an engulfing pattern, one candlestick that engulfs 1, 2, 3 candlesticks, plus another thing that is very interesting about this candlestick is with one candlestick, the trend changes, right? This is also very interesting. So that means for you, this is a very good, maybe you were not trading this and you were not, you were not trading on Wednesday, but this piece of information is important for you for the next day. So just because you're not trading, or just because you didn't trade, or just because you didn't catch an opportunity, this doesn't mean anything. Write down what you have observed and start collecting information. Observing is the best tool you can actually apply as a day trader to collect information, guys. And yeah, so rapid movements. I actually want to talk about rapid movements. Rapid movements, let's say it's before, or the London trading session is about to open and you see a rapid movement, you can't catch that particular trade or price movement. What usually happens is it triggers a certain fear of missing out. Now, the problem with fear and regret or wishful thinking is that these are, usually innate emotions. These are very basic emotions any human being has. So trying to fight these emotions is, that's not going to work, because that's just not going to work. Fear is usually there, biologically seen. Fear is actually a good emotion, because it protects you not to be eaten by something, for example, right? It protects you from dangerous situations. So that's the reason why fighting it doesn't work. That means we have to have a closer look what actually is going on inside your mind. And as I said, rapid movements, they happen quite often. They trigger fear, they trigger regret, they trigger wishful thinking. And this, the common denominator of all these components is fear, regret, wishful thinking. Those are daydreaming. This has nothing to do with trading. You are just daydreaming. And I'm also going to talk about why you are daydreaming. This is a normal thing, actually. And the interesting part of that is, as I said, right, it triggers at some point, it doesn't matter, it doesn't even need to be a rapid movement. Let's say you missed out on an opportunity and you start now regretting that you didn't buy at that particular point, because you look down to your paper and you see, oh my gosh, my analysis was proper, right? My analysis was correct. I should have taken this trade. Now, the problem is the market is an unstructured place. Without the indicators, without support resistance, without all the price patterns and candlestick patterns, it's just an unstructured place, isn't it? You start drawing all these patterns, you come up with Fibonacci, you come up with these zones. This is you. You are creating it, aren't you? And you always have to be aware, and there is no solution for that. You always have to be aware that maybe you are spotting something that is just born out of your wishful thinking. Maybe you are just daydreaming because you are looking for a buying opportunity. And that's the reason, guys, think in both directions. That means always have two scenarios in the back of your mind. Yeah, always have two opposite scenarios. One for a buying scenario and one for selling scenario. I'm not saying that you have to trade both directions. I'm just saying always understand that maybe it's just you looking for, for a certain pattern. Maybe the pattern is not, is maybe not even existing. Now, the problem with the unstructured place is, as I said, the market is an unstructured place. The problem is your brain requires a structure. Yeah, your brain is always looking for patterns. It is looking for repetitive patterns. It's looking for a particular structure. Why? Because as I said, 95% of all your actions, like your feelings, your emotions, your memories, etc., even breathing in and breathing out, heartbeat, etc., is controlled by your subconscious mind. That means your brain requires structure. Now, the problem with another word for structure is habit, right? Another word for structure is habit. A habit gives you a structure, doesn't it? A habit is repetitive actions. Where do these repetitive actions come from? Repetitive actions, they are based on repeated decisions. That means, now the good news is, it is you who has decided to do something, right? That means if you want to change the outcome, if you want to become a consistently profitable trader, you need to ask yourself, what decisions do you need to make to become a consistently profitable day trader? For example, I've been day trading now for 10 years, and I have noticed that, you know, I used to, when I started my career as a day trader, I used to trade, you know, I'd say 5 times a week, and now it's only once a week or twice a week, and not more than, you know. That means you have to ask yourself, what can actually lead to the outcome to become a consistently profitable day trader? What decisions do I need to make? Write down all the decisions and write them down here into this grid that I showed to you, right? Write down what types of decisions you want to make every single morning, and then repeat those decisions, and you will turn these decisions into repeated actions, and actions into a habit. And the habit will be the structure for your brain. That means if you want to stop repeating the same toxic behavior again and again, that basically leads to, for example, to, you know, blowing up your account or whatever, then start with your decisions. Write down, what do I really need to decide to do every single morning? Every single morning, I need to, for example, keeping a trading journal, right? Writing down all your trades and these types of things. Now, what we also have to clarify is the question, why do you repeat the actions which don't lead to a good result? Why do you keep doing those actions? Why are you not a multimillionaire? Why are you not a billionaire by now? Why do you keep repeating actions that don't lead to, you know, a result that is satisfying, or that lead to a certain amount of whatever? You understand? Why do you repeat those actions that basically don't lead to a certain result? Why do you do that? Exactly, yeah, that's a very good one. Introduce a counter view. Exactly, a counter view. Guys, why do you keep doing it? Why do you keep repeating actions that don't lead anywhere? Why do you keep doing it? And don't talk, you know, you have a self-talk, don't you? Don't talk to yourself in a way that you say, I should follow my trading plan. I should follow my trading strategy. I shouldn't blow my account. I should know something about risk management. If you talk like this to you, I can tell you, this is doctrine. It's not going to lead anywhere. You are never 100%, that's guaranteed. You're never going to change in your entire life if you talk to yourself using the modal verb should. If you always say should, you're never going to do it. Why? Because you're fighting yourself, right? So that's never going to work. The moment you use the word should, everyone knows that's not going to lead to change. Maybe the ego doesn't want to. Yeah, maybe, yeah, but let me tell you let me give you a biological answer. Pain and pleasure. Guys, imagine the situations. Look, you blow up your account, right? how do you usually feel when you blow up your account? Or how do you feel when you make one loss after another? It is painful, I guess, isn't it? I don't think that this means pleasure to you, right? So I think that's a painful situation. Now, your brain doesn't care about painful or if the situation gives you pain or pleasure. Pain and pleasure are the most intense feelings that you can actually produce, right? Pain and pleasure. That means whenever you feel pain or pleasure, your brain basically thinks, great, we're feeling alive now. That's brilliant. With my human being, right? My human being, the body feels alive and kicking, and your brain thinks that this is something good. And that's the reason you basically keep repeating the same stupid mistake. Well, for sure, the other thing is ego. But let's say you have been working on it and you now understand, well, admitting that you were wrong is better than, admitting it sooner than later is better than anything else, because you don't want to blow up your account. Let's say you have worked on that. Nonetheless, I'm going to tell you, as long as you have pain and pleasure, this is the hardest thing to change. Once you have learned, once you have programmed in your brain once you have made certain decisions, right? Once you have made certain decisions, and once you have repeated these decisions again and again every single morning, once you have repeated those actions, once you have turned everything into a habit, and you get pain or pleasure, your brain will refuse to change that. That's hard work. If you want to change this, what we have to do is, you have to first of all understand, trading has nothing to do with intense feelings. Trading is a job, right? A day trading is a job. It is a job that consists of 90% of waiting. Okay, that's exaggerated. 70% of waiting, right? 70% of waiting and not doing anything and waiting for a particular scenario, because you did your analysis and now you're waiting for a particular scenario. Trading is not exciting. And Dr. Alexander Elder in his book, where is the book now? Dr. Alexander Elder in his book says, get your excitement from somewhere else. Get it from the outside world. Don't get it from the market, right? Because the market there, actually, you will end up as a consistently profitable day trader by consistently, basically taking trades. But it's not, don't seek for excitement. And you will not, as a trader, you don't feel an intense feeling while you're waiting. So you feel, you usually, while you're waiting, you're not feeling excited, do you? And this is the reason why you end up repeating the mistakes, because your brain wants you to feel alive. You understand the problem? Your brain wants you to feel alive. So your brain starts, triggering actions that lead to pain or pleasure. And you then make mistakes. You then start ignoring your trading strategy. You basically, start buying or selling randomly. You start over trading. You start increasing your lot size. You're not using any stop loss for whatever reason. You're not using any take profits for whatever reason. And then you have intense feelings. Those feelings are bad, but your brain doesn't care. And then, let's say after 1 week, you're doing much better, you have your account back, but I can tell you, this will come back and you will repeat making the same mistakes again and again. And as I said, don't use the word should, right? I should follow everyone knows that. That's not going to change anything because this is a doctrine, right? What you can do is, and this is something that I just want to introduce today. This is just an introduction for today. I am now preparing another webinar or video. I have to see I'm either going to upload it on my own YouTube channel or I'm going to do it as a webinar. I do want to talk about self-discipline for traders, not self-discipline in general, because we don't care about the rest of the world, guys, do we? We just want to become good traders. So I am preparing something, a self-discipline program for traders. Now, what does self-discipline mean? Self-discipline actually means you're working consistently on a particular goal you have. You first of all have to define that particular goal, whatever it is, make it measurable, right? And with iron willpower, no matter what actually happens, and no matter until the time doesn't really matter when you achieve your destination. So self-discipline is not a boring thing, but it requires you to be determined and to work on certain things. As I said, if you want to change this, what you can do is basically write down what you now want to, your brain, if you want to teach your brain something new, or if you want to get rid of something, your brain is now looking for alternatives. That means train or teach yourself an alternative, give yourself an alternative. And it's not wrong seeking for excitement in the outside world. Get your excitement from the outside world while you're waiting. Have activities that give you some sort of excitement. Now, self-discipline. Now, today this is just an introduction, but I am, as I said, I am currently preparing a program for traders to become self-disciplined. So, first of all, the very first step is stop loss. The idea of stop loss. Sometimes people say, well, I don't know what people say, but my idea of stop loss is, as someone has just said it, right? Someone said, introduce a counter view. That's something that I use as well. And by stop loss, in my scenario, always means if this and that happens, or what needs to happen on the market that my idea, why I entered the market, is wrong, right? In which scenario would my idea be wrong? And when I say, oh, if this and this happens, my idea would be completely rubbish, in that scenario, I would need to quit the market. And then I quit the market. And for sure, I first of all check, can I even, afford it to lose that much of money, right? And every time you enter a trade, bear in mind or think of the money in a way that you basically say, this money is gone, right? Think of it like that, and not I am now looking for, I don't know, I want to make 3K whatever, right? Think it that way, that you basically say, I enter a trade and I wouldn't be upset if I lose that money. That's one thing. That means taking care of risk management. And there is a saying among traders, take care of risk management and the profits will take care of themselves. Yeah. So take care of risk management. And this also includes the idea of the money that you made, try to, retain the money, try to keep the profits. That's also an important topic in the sense of, not over trading. But the best thing is keep a journal, not only of all your trades, but also write down the thoughts and, the struggles that you have. And then you can basically create a grid again, and then write down what do you actually want to replace by what. If you want to change everything, I mean, that's not just for trading, but if you want to change something in your life, always look for an alternative. You can't just say, I want to get rid of this. Maybe in some scenarios it basically works, but make sure that you have an alternative, yeah? Another thing is stop chasing profits. That means when you're entering, not, just don't chase profits, but focus on, get involved with trading, right? Trading is not a quick fix scheme, but it is more about the idea, become really interested in trading, in the whole process of trading. That also means try to acquire new knowledge, try to learn something new, do something different, change your behavior by using these habit trackers, right? That means get involved, guys. Not just a superficial, I'm here to make money, well, good for you. That's never gonna work. And understand, this is also something funny, I don't know, maybe that's just true for the new generation, but you know, my generation and probably many other older people, they do understand that when you want to acquire a new skill, or when you want to acquire a new skill, when you're working, when you have been just hired for a particular job, or you are in an apprentice, you're doing an apprenticeship, everyone would understand that this takes years of hard work. Yeah, a normal apprenticeship here in Switzerland, it takes around 3 to 4 years. And trading is also a craft. That means it's going to take some time. You're not going to be profitable for the first 3 years. That's for sure. This is what I would say. That's for sure is what I would say. I know on YouTube you find tons of videos. This person became consistent or profitable within 2 years or whatever. It may work, I don't know, but understand that things take time. And get involved, right? Fully involved. That means you're not there. You're not there to abuse the market to reach your goal. You're not there to abuse the market to make money. That's like a relationship. That means be interested in the market. Try to understand. Only study, for example, 2 Forex pairs and try to understand, the overall situation, and try to understand how these 2 Forex pairs, for example, work. Learn everything about these 2 pairs, for example. And yeah, and self-discipline is also, self-discipline also means ask yourself, what do I need to give up? Do I need to give up maybe the emotional side of me? Then ask yourself, what are good, or solutions for me? Yeah. And then for sure, with a trading plan, if I were you, I would write down all the rules that you have, right? For the bearish market as well as for the bullish market. Write down all the rules that you have. Write them down and pin it to your wall or something. Make it visible for you. And exactly. And this is the last point I want to mention. Mental training like athletes. You must have heard about this scenario or about this situation. I wanted to show you something. Mental training, right? For top athletes. And this is something that you can actually also do as a trader. What you can do is, even those days that, when you don't want to trade, or even in the evenings or before you fall asleep, what I really do, and I would recommend to you, it sounds really creepy and completely weird, but what I do is, before falling asleep, the last thing I usually do is I go through the higher time frames. That means in my mind, I ask myself, what is the situation on the higher time frame? What scenarios do I expect tomorrow? And then I go, or sometimes what I do, and what I do at the weekends is, I basically go, in my mind, I basically go through certain, trades that I took. That means, I reflect about those trades as if I were in the middle of trading. And this is also very, very useful, because imagine Saturday, Sunday, you're not doing anything because it's weekend, or the market is closed, and then you expect on Monday to be ready to take a good trade. You understand? It takes mental training as well. And ask yourself, what does it take? Do I maybe need several sources of income? Yeah. Do I need several sources of income? Maybe there is a lot of pressure on you. Maybe every time you open the chart, you're thinking to yourself, but I have bills to pay, right? If you do that, if you can take away the pressure a bit, maybe that's going to help you. So that means this is an important topic. Self-discipline is an important topic. And I'm going to, as I said, I am currently preparing I am actually preparing a program where I want to talk about self-discipline for traders, not self-discipline in general, because nobody cares about that, but self-discipline for day traders. Okay, so what you have learned today is that understand this is not an easy thing. If you have taught yourself a certain action and you keep blowing up your account, or you keep losing money, or you keep just making, you know, a certain amount of money, maybe you can't make more than that, this is all because of pain and pleasure. That means seek it elsewhere than on the market, and try to replace those decisions that lead to, you know, as a results that you were not hoping for. That means change your decisions, and for this, track your habits. That means write down all the decisions that you want to take from now on, right? The decisions that you want to take, write them down and repeat those decisions, right? Write down the actions, yeah? And then repeat those and apply those to your trading. And no should, right? Don't tell yourself, I should do this, I should do that. Yeah, this is it actually. I don't know, let me see. Yeah, and as I said from the very beginning, I told you guys, if you don't want to apply what we have learned here, or, you know, trading psychology or psychology in general, it basically means that you have to apply what you have learned. If you are not willing to apply what you have learned, you're never going to change anything. And spotting patterns, anyone can do this, right? After 1 year, you can perfectly spot all the patterns, etc. And the problem is people get insecure, and what they do is they usually start using tons of indicators. That's not helpful. Indicators are not doing anything else. What indicators do, the very definition of indicators is they take the data that is already available and they turn it into something, right? But I would say to you, after 10 years of trading, my advice for you is observe the market. Observing the market is the best indicator on this earth. Study the Forex pairs, right? Have 2 or 3 Forex pairs, study them meticulously, and learn everything about your Forex pairs. Hello, Jat. Wow, you're a bit late. Yes, you're late. Yeah, guys, yeah, emotional intelligence is important. But that's not going to help. I'm talking about trading psychology, and trading psychology is hard work. What I'm trying to teach you is you really need techniques, and you really need a plan and a strategy if you want to change something. People act like as if they could change things like that. But look, when you trade, right? When you trade, you have a trading plan, you have a trading strategy, but why don't you have a plan and a strategy for the psychological part? Isn't it important? You know? Yeah. Guys, the way I speak, I'm not upset. This is just, I'm just emotional, I guess. All right, I think this is it. And I really hope, I'm a bit disappointed because I asked you the question, what did you really learn? And nobody said anything. Aren't you applying these techniques? I mean, if you're not applying, then I don't know. Yeah. Okay. Yeah, for sure, risk management is the key. Everyone knows that. But, I mean, risk management is the key. Okay, then do it, right? But nonetheless, you keep repeating the same mistakes again and again, right? I'm not trying to, I'm not trying to make fun, but what I'm trying to do is I really want to be honest. I really want honesty because, yeah, as I said, risk management is for sure very important. But what if you, for some reason, if you repeat the same mistakes again and again? This is what I have explained today. This has a lot to do with pain and pleasure. You want pain and pleasure. You want pain, actually. Yeah. And if you want to break that cycle, what you have to do is get your excitement elsewhere, first of all. And secondly, think about the decisions, about the actions you repeat. What are those actions? Yeah. And as I said, I'm not upset. I'm not making fun or anything. I just want to be honest. That's one thing. And another thing is I just love the stock market so much. I just can't, you know, I just can't calm down if I talk about something I'm excited about. Okay, I really hope you are going to apply a couple of these techniques, because next time I will ask the same question. I do want to, next time I actually want to focus on self-discipline for day traders. Yeah, so if you're interested, make sure to join, or as I said, maybe it will be on my channel. I have no idea. Okay, guys. So as I said, I don't make fun, right? I know that how painful the whole thing can be, and yeah. So I do understand what people are going through. So I just want to be I just want to talk about things honestly, right? Okay. So hope to see you next time, and take care. And yeah, so this is it for today. Bye-bye, guys. Have a lovely weekend.
Hey guys, thanks so much for watching today's stream. I hope you got a lot of value out of it. And hey, before you go, make sure to check out our guest on social media, as well as subscribe to the A1 Trading YouTube channel for more free trading content throughout the week. Before we go, I do also want to say down below in the description, there's all sorts of great perks for you if you're looking for a broker. We've got some recommended brokers. We've also got a Telegram channel and email newsletter that you would probably benefit from if you're an aspiring trader. So take advantage of some of that free stuff down below. It will also help out the channel tremendously, and we will see you back tomorrow.